here today with Peter Harold, Managing Director of Panoramic Resources. Peter, thanks for your time.
David, thanks for having me.
Can you give a little overview of Panoramic and what assets it has in its portfolio?
Predominantly we're a nickel company. We've got two nickel assets, Savannah in the Kimberley and Lanfranchi out at Cobalt. We've also got two PGM projects, one in Canada and one in Northern Australia, and we've recently spun out Horizon Gold, which we own 51% of, and that holds the Gum Creek gold asset.
You have exposure to a number of commodities which are staging a good rally. What's your view on where the market's looking for the future?
Look, nickel looks a lot better than it did 12 months ago when we put the mine on care and maintenance. There's been a strong recovery there. The nickel price is up about 50%, and there are a lot of forecasters forecasting higher commodity prices, especially nickel, especially with the demand for stainless steel improving and also for nickel in batteries. Cobalt is another commodity that we're exposed to, and you've seen rapid rises in the cobalt price, and again, big exposure to the battery market. A lot of people understand lithium and graphite, but there's also a lot of cobalt in batteries. I believe up to 9 kilograms in each Tesla of cobalt, so that's good for the cobalt market. And copper, we're exposed to copper as well. And similarly, the demand for electricity going up, electric cars using a lot of copper. So I think all the commodities we're exposed to are very attractive, and even our 51% interest in Horizon, a lot of exposure to gold, and the gold price has been strong as well.
Recently, the company completed a feasibility study at Savannah. What were some of the key highlights?
Yeah, look, we're really pleased with the results of the Savannah study, which we put out about a month ago. What we've done is we've combined the old Savannah ore body, which has got about 12 months to go, with the new Savannah North ore body. The combined resource gives us about a 10-year mine life. The key drivers are it's a very quick restart. We can be producing nickel within about 5 months. The cost to restart is only about 20 million Australian dollars. And the other thing is that the cash cost, the average cash cost for the project is around about $3.30 US a pound after byproduct credits, with an all-in sustaining cash cost of about $4.40. So that puts us in the bottom 40% of cash costs around the world.
What optimisations are you currently looking at on the feasibility study?
So what we've done is we've said that we're going to study a number of areas. One is optimising the mine plan, because there are some higher grade zones, and we're looking at whether we can optimise the mining rate there. There's also the ability to bring some of the material that's currently not in the resource and reserve into the mine plan, so we're looking at how we do that. One of the other areas we're looking at is around whether we could split and have two concentrate streams. We've always produced a bulk concentrate, which has nickel, copper and cobalt paid. If we split a separate copper concentrate out, we could get a much higher payability for the copper con. And we're really excited about that opportunity. The metallurgy is doable, and the capital cost we believe is not significant, so we're working on that. We're also looking at what things we could do using contractors, what things we could do ourselves, the opportunity to go for a hybrid solar diesel power system. At the moment, previously we've been using just diesel. So there's a number of options around there that could all bring the cash costs and the operating costs of the project down.
And what are the next steps, not just for Savannah, but the other projects in your portfolio?
With Savannah, I mean, clearly it's the optimisation study, watching the nickel price, and hopefully we're getting very close to a point where we could restart. We've obviously got to look at how we finance the restart, and we're obviously talking to a lot of banks, existing customer, potential longer term customers, all around the best way to finance the project for the restart. With the other projects, Lanfranchi, there's 95,000 tonnes of nickel in resource there, so there's a good resource there, waiting for a better time in the nickel price cycle. So we're just sitting on that asset at the moment.
So the recent spin out of Horizon, a success, and what does that enable both them and you to do?
Yeah, well, we obviously raised $15 million through the IPO. Panoramic retains 51%, and we're the operator, so we provide the management services. That means that all the knowledge that we've got of the asset over the last 5 years since we've owned it continues on in Horizon. With that funding, we've got a sort of a three-pronged process. One is exploring for new ore bodies, and we've got some really exciting IP that we've done there, induced polarity technology to actually find potentially new targets that we can drill. There's also some of the other existing resources which we can drill out further, looking for extensions to those. And then there's already 1.25 million ounces of gold in a number of different resources, which we can look at whether we could mine those. And so we've got optimisation studies around previous feasibility studies we've done on free milling material and also on the refractory material at Gum Creek.
Peter Harold, thanks for your time.
Thanks, David.